The Dow is now down more than 5,000 points from its all-time high. It is causing a lot of anxiety and, so many American households.
So we are joined now by Austin Moss from the Leeds School of Business at CU. Thank you so much for being here, Austin. We have so many questions. So first and foremost, what is your reaction to the, hello there. What is your reaction to the financial headlines over the last week and a half since the president first announced the new tariffs?
Yeah, it's been a wild ride over the last week or 10 days since Liberation Day, last Tuesday or Wednesday. We've seen markets go down a lot at the end of last week, pop back up on Monday because of a fake news tweet about President Trump pausing tariffs. And then in a crazy turn of events, President Trump actually paused those tariffs. Yesterday, we saw the market have its third largest gain since World War II. And like you mentioned, it has since retreated back down today.
There's so much concern, so many questions, because this is uncharted territory, right? I'm wondering how Main Street investors are even reacting to the headlines from Washington. Do they know what's happening?
Yeah, exactly. This tariff move is really one of the largest U.S. global economic policy shifts since prior to World War II. Over the last, since World War II, we've been globalizing our economy, and now we're kind of going into a protectionist economy. Main Street investors naturally are scared. They don't know what's going to happen. And there's actually two types of investors, I would say, that are reacting here. The day-to-day retail investor day traders are actually excited, a lot of uncertainty, but they're excited to try to profit off of these opportunities because they believe they can predict the market. But most Americans with their wealth in their retirement accounts, they're seeing that go down and they're scared. They are probably going into a bit of panic selling, which is not what I would recommend at this time.
Yeah, I definitely know that there's a lot of fear out there. And you mentioned earlier a fake news tweet. So you do have some background in fake financial news. So when it comes to the financial world, why is it so difficult to sort out the real headlines from the fake news?
Yeah, it's a great question. Especially right now, it's just because there's so much uncertainty. Policy and political uncertainty leads to really large overreactions to pieces of new information in the market. Also, profiting in the stock market is all about being the first person to act on a new piece of information. So on Monday, traders saw that there was some random person that tweeted that Trump paused tariffs. In order to profit off that opportunity, they react to that tweet before verifying whether it's true or not. That moves our markets and whipsaws a lot of our market movements.
Thing like this, these market swings that we've seen in the last week, is this familiar to you at all?
It's pretty foreign territory. We did see some similar market swings in 2008, the financial crisis. And we also saw a couple of similar swings during the COVID kind of shutdown pandemic era. I will note, especially, relative to both of those scenarios, the markets are up huge since both of those things. So stay invested, and especially long term, as markets tend to go up over time. I think it's gone up about 6x since the 2008 crash in times of volatility.
Austin Moss from the University of Colorado. Thank you.